Hi guys, and welcome to this week's edition of our Outlook, where we're going to be looking at what we anticipate the market to do in the coming week. Forgive my voice, guys. I've got a bit of a cold. I'm catching a cold a bit, so I've got flu. So yeah, looking at dollar index, we have seen price breaking out of this bearish order block. Now this is a weekly chart, and we're still taking off to the upside on dollar. I'm still expecting dollar to push to the upside, but that does not mean we are not going to get reversals to the downside where dollar finds resistance and then it drops. So but from a higher time frame point of view, I'm still bullish on dollar index. But the crucial price action which I was waiting for since this rally, you see, the crucial price action which I was waiting for was this: the fact that we have broken out of this bearish order block, and then we saw last week dollar push to the upside, and heading into NFP, as I predicted on the last Outlook, that we're going to see dollar retracing to the downside. And eventually during NFP, dollar did find a bit of support and appreciated in price just a little bit from that discount array. So now looking ahead in the coming week, the range that we are working with, so this is our high and the low of the previous week. We have to define that range so that we can try to predict where the market is going to trade to in the coming week. So now looking at the coming week, we've got buy stops here, and these buy stops are above. Let me just highlight that quickly. We've got buy stops above 94.31, so that's basically 94.30 institutional price point. And then we also have buy stops above this range here, and these ones, they're right above 94.77. So the buy stops above 94.31, they remain our target for longs, right? They remain as our short-term target for longs, but we need to be ready for a reversal back to 92.450. Expect the market to retest 92.450 before we could see another leg up, right? This is what I'm anticipating the market to do in the coming week. We're going to have a drop probably back to the 94.45 or another zone which I'm going to show you on lower time frames, but 92.450 will be the ideal area for us to load more long positions. It's the ideal area where we have to hunt for discount arrays to trade from. Now, with that said, let's go to a daily time frame quickly. Now, on the daily time frame, you can clearly see we have got a swing move in price from this low to this high, right? This was the high that we used from last week, right, where we placed our fibs from low to high, and this low came in after the sell stops have been liquidated. We had sell stops below 91.33. Those sell stops were liquidated, and then we had a push to the upside with displacement, with price move in a strong bullish move to the upside. That can only be institutions moving that price. Now we're going to grab our fibs low to high, right? Now remember, this is not the holy grail, but it gives you a guide on where you should expect price to trade back to before you can start hunting for long positions on dollar. Right, now with our fibs in place, you can see we've got our equilibrium point coming in at 92.32, right? That's our equilibrium point. Now when you look at 92.32, what PD array do you see to the left on price action? Let me zoom in a bit. Let me zoom in. Now I've zoomed in. Now remember, this is our weekly old bearish order block, which was broken here. So the gray shaded area, we anticipate price to find support and trade high. Now where does price find support? Price is going to likely find support on discount arrays. Now we've got a vacuum here, we've got a vacuum here, we've got a bullish order block here, right? You see, I've already highlighted just three discount arrays that I can see from just randomly looking at the price action. But if you look closer, we've got this down candle here. You see this down candle, it's coming in the range where we expect price to be in discount, and that down candle is our bullish order block, the high of that candle, right? So I'm going to highlight the high, which is coming in at 92165. 92165. You can see we are below 92,450, and then we have this low, right? Now in between that price action, we've got a fair value gap. So we have a fair value gap between these two price ranges. Now this fair value gap is falling right at a discount that we should anticipate price to trade long from. You see? So this is the ideal area, but of course this candle is going to provide support when price comes here. Already we have seen a rejection from Friday. You can see here Friday's low found support in this bearish bullish order block. Sorry, you can clearly see that the low of Friday's low came in at 92835, and you can see the open on this down candle came in at 92825. You see, that means this candle traded right into this price action and found support. It found support where? On a discount array, and then it rallied to the upside. It wasn't much of a rally, but it was quite a few pips, about 25 pips to the upside. Now when we have this marked out, we have the fair value gap, we've got vacuum blocks here, we've got old lows that have been respected when price was going to the upside. What lies below old lows? We've got sell stops. Now as long as price trades below 9232 and 9174, let me give this a different color shade. So in this pink shaded area, right, this is where we're gonna say dollar is in discount. We have to be hunting for longs. But yes, this bullish order block here is also going to provide opportunities to trade to the upside. But what you need to do now, when price drops into this, you need to read your price action, see if there's no more momentum to push to the downside, see if there's any fundamentals that are going to be released. That means looking at your calendar, right? That are going to be released probably Monday, Tuesday, that support a bullish dollar. So you have to wait for the number to come out. If it's a positive number for the dollar, then this bullish order block is going to provide support, and then price will rally to the upside. But if we don't see momentum dying, if we don't see any big bodied candles to the downside here, if we don't see that there's small bodies of candles, then it means there'll be big range candles, meaning we have to wait for that candle to close for us to make a decision, because there can be maybe a big candle that closes way below this bullish order block. In that case, we'll be anticipating price to keep going to the downside, meaning our target for longs is going to be 92.11. 92.11, then we expect price to go to the upside. Now, two main difference. The two things, or the main thing that is going to make you enter here for longs or enter here is your risk management. An entry in this range, let me mark out exactly where you should anticipate. So this is the body of the candle. Now let me highlight the 50% mean threshold. So that's 92.76. You can see 92.76. That's your ideal area for longs on this bullish order block. Now, when you go long here, your stop is going to be a bit high, meaning you are risking what? A lot. Yes, you can put your stop below the order block, but that can be liquidated, that can be swept through, and then price eventually rallies to the upside. So any longs in this fib setting, any longs that you take, whether it's between the equilibrium and the 79%, make sure your stop is way below 9228. That way you are safe. You see, yes, some are going to say, but Ivan, that's a very big stop loss. Now, your risk management, make sure your volume is also less, your lot size is not overbought. You see, calculate your risk. If it means you enter at 92.76, you're looking at a stop of about 150 pips, right? But if you enter at 92.11, you're looking at a stop of 93 pips. Now, 150 pips, how do you lessen your risk? By executing your trade with a less lot size. You're not going to go a standard lot size with 150 pips. That is going to be suicidal, unless if you have a massive bigger account. Now let's go to H4. Now on H4 you can clearly see price action. This 92.37, right? That's where the high of this fair value gap is. In this range here, ideal area for long opportunities. 62%, 92.11, ideal area for long entries. Also, this daily order block here. So this is our daily bullish order block. This is our daily bullish order block, the pink shaded area, and the dotted line represents the 50% mean threshold. In this range, we expect price to find support because we are in a discount array. Expect price to find support and rally to the upside, probably taking out the highs. Now remember, if you trade from a daily discount array, your target is a premium on H4 time frame. Meaning if an entry at 92.76, you are targeting this order block. You are targeting this order block. You see? If you go long from a discount on a weekly time frame, your target is a premium on daily time frame. If you go long on a monthly discount, your target is a premium on the weekly time frame. Same applies if you go long using a daily discount array, which is our pink shaded area. Your target has to be a premium on a H4 time frame. So I hope you have now seen what I'll be hunting for when it comes to dollar index. Yes, I'm anticipating another drop to the downside, and only when price drops into these discount zones that I've highlighted, then I'll be reading the price action, looking at the forex calendar to see any fundamentals that are going to support the dollar to push to the upside. But for now, expect a reversal to the downside. I wouldn't anticipate dollar to reverse all the way to 91.35 at this moment in time. I do believe we still have a leg up to push to the downside, to the upside, because if you go to weekly, the weekly time frame, you can see the buy stops above 91.31, they're still exposed to the market. So that's the outlook that I have on DXY for this week. Now when we go to Euro USD, if we are bullish on dollar, it means we are going to be bearish on Euro USD. And looking also at Euro USD, price finally closed below this bearish order block here. We traded through, closed below, found resistance, and continued dropping to the downside. Now where is it going? Where is price going on euro? Price is heading for 1.16 300. That's the target for euro. You see, if you are to trade short on this weekly time frame, your target is a discount array on the daily time frame. If you are to trade short, your target is a discount array on the daily time frame, which is this bullish order block here. This will be your target for any short position that you take using the weekly range. You see, any positions that you take using the weekly range. Now, where do you anticipate price to trade to for you to take your shots? Right, with euro, you can see we broke below. So we've got our breaker here. We broke below 1.1833. So this range of price is going to offer opportunities to trade short. Let me just highlight it a bit. Need to highlight the proper price zone. Right, so we got 1.1860. 1.1860 is going to be an ideal zone for you to trade what? Short. Since I'm expecting dollar to retrace to the downside a bit, same applies on Euro USD. I'll be anticipating euro to push a bit to the upside before we see another leg that is going to take out these two equal lows. So I'm expecting euro to push to the upside before another huge drop to the downside to take out these equal lows. Now let's drop down to a daily, and also on this weekly time frame for euro, you can see we've got our last up candle there, which is our bearish order block. Just for price action sake, we are going to mark that candle but I don't anticipate price to trade all the way up there. We also have a vacuum here which was filled, and then price fell massively. So eventually when price comes back there, it's going to offer great opportunities to trade short. Now going on to the daily time frame for euro, right? We've got a new low that was formed on Wednesday when price found support at an old discount here, old low. Price found support and then traded to the upside. We still have these two equal highs here, right? So we've got a low, then we have an intermediate short-term high here which didn't break above. So from this high we had an expansion. Remember, we need to see that we had price massively move to the downside. Grab your fibs from the high to the low, right? From the high to the low. Now this is not holy grail, I emphasize, but it guides us on what we have to expect price to trade to. So high to low, we need to hunt for equilibrium. Can you see equilibrium? We've got a fair value gap, this bearish order block here, and the high of this candle. There's a fair value gap in this range, right? We've got a fair value gap between 1.1824 and 1.1874. There's a fair value gap which you should expect price to trade to and then fall to the downside. In this range, price is going to be in premium range where we anticipate short trades to the downside. So let me just get rid of the fib so that everything is not cluttered. Right, you see we've got a bearish order block here. See, this is our bearish order block zone, right, on the daily time frame. The pink shaded area is our bearish order block on the weekly time frame. But the low of this last up candle and the high of this down candle, there's a fair value gap, right? We also have a bearish order block here which price did find resistance and pushed to the downside, but not by much. That was NFP. NFP we traded into this discount and then we pushed to the downside. Let me highlight it and put my normal coloring. So that's a bearish order block. So in this range, expect price to find a bit of support. So we are still in that range, the 117, 1.1778. So expect price to find resistance because of this premium array here. So price will definitely find support, resistance I mean, before we push to the downside. So if we are anticipating to trade short from this daily time frame, where is our targets? We go to H4 because now we are targeting discount arrays on H4. If you trade short from 1.1778, your target is down here at 1.173. This is a bullish order block. You are trading from a daily premium array. You are shorting from a daily premium array. Your target is a discount array on H4. Long term wise, our target on long term wise, our target is 1.1630. So I'm expecting price to trade down to 1.1630, but from these daily premium arrays, we will see a retracement to the upside before another leg push to the downside. So yeah, I hope this has been insightful to you and you have found some useful tips that you are going to use in the coming week. And for those that haven't joined the mentorship, unfortunately you're only gonna see this video Wednesday morning, and if you're in the group you get the link immediately on Sunday to your inbox. So yeah, that's pretty much about it for this week. And just a quick recap. USD/JPY, we're still long on USD/JPY, and we are also still short on GBP/USD. But I leave this for you as your homework to define your premium areas on GBP/USD where you're going to be shorting from, and on USD/JPY I leave to you as your homework to define your discount areas that you're going to trade long from. So yeah, if you haven't subscribed to the channel, guys, just click the subscribe button there and make sure the notification icon is checked so that you get a notification every time I upload a video to the channel straight to your inbox. So with that, I wish you guys good luck and happy trading in the coming week. Thank you.